And now the federal government has also been urged to increase the nation's foreign earnings by facilitating export of cargoes through Nigerian ports. Participants at the yearly conference of the Shipping Correspondents Association of Nigeria in Lagos emphasized the need to eradicate corruption at the seaports and also upgrade port infrastructure. They note that in order to also ensure safety and security of vessels on Nigerian waters, there's the need to intensify efforts in cadet training in line with ongoing efforts by NSML aimed at providing training berth spaces for Nigerian cadets.
Pilots operating in the region are well equipped to attack further away from shorelines and are unafraid to take violent actions against innocent crews. These security challenges persist. These highlighted issues pose significant threats to the operations of LNG shipping market, the global supply chain, and the energy ecosystem. And NSML, as a forefront ship management and largest employer of seafarers in Nigeria, continues to contribute and play a critical role in addressing some of these highlighted challenges.
The changing trend in the global energy sector demands a corresponding improvement and updating of the knowledge and skills of the media practitioners to continually avail stakeholders and opportunities and risks inherent in this sector, which could attract more enabling legislation to reposition the sector.
And now shifting focus to the international front, Asian shares are mostly in negative territory, while the US dollar held strong today ahead of US inflation data, which could foreshadow even more aggressive interest rate hikes from the Federal Reserve. Treasury yields spiked to a 3-year high, while oil prices also jumped after a partial easing of lockdowns in Shanghai. MSCI's broadest index of Asia-Pacific shares outside Japan was about 0.2% down after US stocks ended the previous session with mild losses, while Japan's Nikkei also slid 1.79%. Australian shares were down 0.57%, and higher US bond yields were supporting the dollar, with the US currency's index measure against 6 peers moving back over 100 to test last week's near 2-year high. Australian shares were also down 0.57%, and higher US bond yields were supporting the dollar. Now, the US currency's index measure against 6 peers moving back over 100 to test last week's near 2-year high as well. And in this next report now, China is encouraging long-term investors to buy more equities and major shareholders of listed firms to increase their holdings when stocks slump in a bid to stabilize a stock market rocked by a worsening COVID-19 outbreak. The government would also facilitate corporate financing in COVID-hit areas and urge stakeholders to also list firms to actively buy undervalued stocks, the country's securities watchdog said in a statement on its website late on Monday. China's benchmark, the CSI 300 index, fell 3.1% early on Monday, the biggest drop in a month, as the lockdown in Shanghai and other parts of the country threatened economic growth. The market dipped further this morning to a near 4-week low, bringing the year's loss to 17%, as investors appeared unmoved by the securities and also authorities' gesture. The China Securities Regulatory Commission on Monday also said that the authorities will take steps to stabilize expectations of listed companies and investors. And now looking at the highlights of the Russia-Ukraine crisis, telecom equipment maker Nokia is pulling out of the Russian market. Well, that's according to its CEO in local reports, going a step further than rival Ericsson, which said on Monday it was indefinitely suspending its business in the country. Hundreds of foreign companies are cutting ties with Russia following its February 24th invasion of Ukraine and after Western sanctions against Moscow. Now, while several sectors, including telecoms, have also been exempted from some sanctions on humanitarian or related grounds, Nokia said it has also decided that quitting Russia was the only option. The chief executive officer also added that Nokia would continue to support customers during its exit, and it was not possible to say at this stage how long the withdrawal would take. Nokia is applying for the relevant licenses as well to support customers in compliance with current sanctions, it said in a statement. Nokia does not expect this decision to impact its 2022 outlook, but says it would also lead to a provision in the first quarter of about 100 million euros, which is an equivalent of $109 million. Russia is at loggerheads now with Finland and Sweden, the home countries of Nokia and Ericsson respectively, over their interest in joining the NATO military alliance. Wrapping up business news now. Oil prices on the international market climbed today on easing concerns about demand in China after Shanghai relaxed some COVID-19 related restrictions, and OPEC warns it would also be impossible to increase output enough to offset lost Russian supply. US West Texas Intermediate crude recorded a price surge of 3.46% to hit $97.56 per barrel. Brent crude now sells at $101.80 per barrel, registering an upward price margin of 3.32%. Bonolite's performance has, however, lost some steam to date, trading in the red territory with a price dip of 1.89% to sell at $99.24 per barrel. And for the OPEC basket, crude oil dealers offer $101 per barrel, recording an increase in price of 0.9%.